Hello, everyone, and welcome to the July 6th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indie Wealth. Hope you all had a good July 4th, 250th anniversary of the United States of America. But let's get right back into those hot button market issues, shall we? Let's get started. Let's start with something that slipped maybe through the cracks last week. Was jobs data was released late last week. I think most people were already thinking about hot dogs and hamburgers and fireworks. The numbers weren't great. They were 57,000 job growth, which is a pretty steep decline from where we had been the past few months. And then we actually revised downward the prior 2 months. So, not as hot as we thought in the prior 2 months. And then this number wasn't great either. So kind of retrenched us a little bit from saying, oh, we might be in an accelerating path in jobs. Well, we've kind of ended that here now. And again, sometimes these things can get muddy for a month and then it comes right back and those kinds of things. So I wouldn't use this in saying for certain that we're in a slower growth jobs environment at this point right now. But what I would say is unemployment listing of 4.2% is still extraordinarily low, and we're still growing jobs. What that means, though, is if we're on this, again, slow trajectory path here, and wages were still, again, are below the inflation rate at this point right now, that's not the healthiest backdrop. It's not a horrendous backdrop. Again, people still have jobs generally. People are still doing and getting work and getting raises. They're just not getting raises that make them feel better, especially in a higher price environment at this point right now. So it's something to watch out for. We did see the expectations for Federal Reserve hikes. Now we're in hike mode, right? Is that it's expected to be higher at the end of the year. Interest rates from the Federal Reserve, whereas we started the year, it was expected to be lower. So we've completely reversed that now. But that probability came down a little bit because we were expecting both a hotter jobs market, not a hot jobs market by any stretch, but we were expecting an accelerating jobs market and still elevated inflation. Well, we still got that elevated inflation, but the jobs number was a little bit below expectations. So something to watch out for. I don't think that this is a massive sea change where you have to make, investment decisions that are aggressively against what you were doing before. Nothing like that. Just something to monitor to see if next month we start to reaccelerate or if we have continuing weakness here going forward. Turning to number 2, Trump accounts begin. They launched it today. Actually, I think they actually launched officially on July 4th, but President Trump rang the bell on the NYSE and the NASDAQ today to celebrate Trump accounts and their launch. It's an interesting process. For those of you unaware, I'm not going to get too far into the weeds. We can certainly have a discussion if you're interested, but Trump accounts are basically youth accounts that kind of function as an IRA for youth. It doesn't require income. It doesn't require work. It's something that parents and workplaces and even some foundations can provide Trump account access and account opening access for people under the age of 18 to then save going forward. There's some pretty aggressive restrictions on removal and what you can invest in there, but it does give a baseline assumption to saying what you can start your child's future savings at a very early age, regardless of if they have a paper route or anything like that. And then post 18, it actually transitions into a traditional IRA. So I think it's really interesting. Is it a panacea of big sweeping changes? No, but it does provide the youth some area, and parents who want to give their kids a kickstart on their retirement savings as they go forward, an avenue in which to do so. So they're interesting. They're starting up. We're going to see how this affects personal finance planning going forward. I think that's probably the biggest thing is, especially with estate planning and, transition of legacy transfer to the youth and to other to your children and potentially grandchildren. That's the interesting part about this, is to say, how do we plan this in the proper fashion and use these accounts to best set up our estate plan going forward? And I think they will absolutely be part of that conversation. Turning to number 3, we have earnings season starting this week. As you all know, we went through the end of June, and so now we have the S&P 500 and many other companies will be reporting over the next few weeks. So we'll get to know a lot more about the business environment right now. I don't sense that at this point right now, there's a lot of consternation with regard to decelerating growth or something that is really causing some issues. We've had a material decline in oil prices recently based upon, the Iran conflicts, especially the Strait of Hormuz opening back up, and the conflict seeming to be, while not ending by any stretch of the imagination at this point right now, seem to be waning, seems to be coming down. So I don't sense that companies are going to talk massively negatively at this point. I don't see an issue for that. We may see that some with regard to elevated prices and what that's doing for demand, especially among consumer companies and especially among that mid to lower tier consumer, which tends to be more impacted by inflation. That upper tier consumer tends to be, the wealth transfer from having a very strong stock market to start the year overall may buoy their spending a little bit more than on the lower end. So we may hear more about that, but I don't get a sense that there's going to be a lot of consternation out there that's going to cause earnings estimates to really materially decline going forward. But we'll see. We'll see what they start talking about. This week's pretty light. I think only 2 companies are reporting this week. I think Pepsi and Delta. But then next week we have the financials companies. So they'll always kick off kind of the real true earnings season. And so we'll see what they're saying with regard to loan activity, with regard to business activity, and with regard to credit spending for the consumer. So interesting times starting. Earnings season's always interesting. We always learn more. And this is the time where we get to hear from those companies. Lastly, on number 4, we have World Cup fever here at IndiWealth. I know I certainly do. I think I've watched more soccer or football, whatever you want to call it. I think I've watched more over the past couple of weeks than I have in the past few years. I think that's pretty much a guarantee, actually. And it has been thrilling. I don't think I can describe it any other way. It really, and it's been really good from a perspective of excitement, from a perspective of interesting matchups, interesting upsets, almost upsets. Cape Verde, who has an extraordinarily low population, nearly upset one of the largest, one of the favorites in the World Cup. That was really crazy. Mexico and England was last night in Mexico, and England actually triumphed for the Mexican team lost since first time, I think, since like 2013 in Azteca Stadium. So very interesting. I am enjoying it. I am going to continue to watch throughout it. And really, it has been a fun experience. And it seems like, from a U.S. perspective and also from a global perspective. Global perspective, they've been into this for a very long time, but it does seem, I remember going back to New York when I lived there for I believe it was the 2010 World Cup, 2010 or 20, yeah, I would assume it was 2010. That was an interesting time, and that was the first sense I got of a broader community really kind of getting around the World Cup. I didn't play soccer. I didn't watch soccer when I was younger. And got a sense of it there, and really got a sense of, people really pay attention to this and pay a lot of attention to it. And so I've watched more and more, and subsequently as it's gone, but it really does seem that this year, especially, we'll see the U.S. plays tonight, go U.S. And we'll see what, if they win, how much of a hold this really takes and how permanent it can be and all that stuff. But I really do believe that we're past that point. I think U.S. soccer in general has a loyal following at this point right now, and people that really want to pay attention to it, to where that is going to continue to accelerate going forward. And I think this World Cup has been a phenomenal showcase for the U.S. to get more fans interested over time. So that's all I have this week. Tune in next week where we'll have our next hot button topics. But until then, take care of yourselves and thank you.